In 1923, a writer named Edwin Lefebvre published a book called Reminiscences of a Stock Operator. It was a thinly disguised biography of Jesse Livermore, who at that point was probably the most famous speculator in America. Livermore had made and lost fortunes on Wall Street four separate times. He had been broke. He had been worth $100 million. He had cornered the cotton market. He had shorted the 1907 crash. And in that book, Livermore said the single most counterintuitive sentence in the history of trading, quote, after spending many years on Wall Street and after making and losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It was always my sitting, end quote. He wasn't talking about being lazy. He was talking about being disciplined enough to do nothing when the market is telling you to do nothing. Livermore said it another way later. There's a time to go long. There's a time to go short. There's a time to go fishing. I'm telling you the story this morning because the most sophisticated social intelligence system I know of looked at the entire US stock market today and gave me the same message Livermore was talking about 100 years ago. Not one ticker out of 37,700 reached the system's quality bar. Today, according to the BuzzPulse algorithm, is a fishing day. Welcome to Invest AI Savvy, where AI powers smart investing. Welcome to Friday, May 8th, 2026. So we were going to have Jerome Powell on the show this morning to walk us through last week's Fed decision, but he told us he was busy packing up his office or making a move somehow. But anyway, something about handing over the keys. We're going to watch him on the way out. But until then, we have an empty convergence board, two micro-cap surges that don't quite add up, and a semiconductor ETF doing something the data swears it shouldn't be doing. Let's walk through it. The VIX closed yesterday at 17.4, up about 3% over the past week. Quick housekeeping before we go any further. This show is for educational purposes only and not investment advice. Please do your own research. Talk to a real financial professional before you act on anything you hear at Invest AI Savvy. Now, where we are right now, 17.4, that's not a panic number. That is the sound of the market still digesting what Jerome Powell said 9 days ago. Quick refresher, because the dust is still settling, the Fed held rates at 3.5 to 3.75%. 8 committee members voted to hold, 4 dissented. This is the most dissents in a single Fed meeting since 1992. Powell announced he's stepping aside as chair when his term ends next week. Kevin Warsh's nomination advanced through the Senate Banking Committee, so the next Fed meeting in June will likely be Warsh's debut. A Fed in transition, a new chair likely incoming, a market still processing. There's no signal of the day today. I'm not going to manufacture one. The whole point of having a quality gate is to refuse to force a signal when the structure just isn't there. Here's how the algorithm got to the closest thing we have today. It looked at every name with a social surge in the last 24 hours. It cut that list down to the ones with positive sentiment, and it cut that list down to elevated Z-scores. And then it tried to cut that list down to anything with momentum, options flow, a catalyst, an earnings date. The list went to 0. 2 names survived, 3 filters, and failed the 4th. Both micro caps, both running on social fuel alone. The first is GDC. Closed yesterday at 15 cents, a Z-score of 5.1. That sounds high, but let me tell you what it really means. A Z-score of 5 means today's mention volume is 5 standard deviations above the normal baseline. If the activity were random, that would be roughly a 1 in 3 million event. So it's not random. Something's causing people to suddenly talk about a 15-cent stock. The math doesn't care about what they're talking about. The math just flags that there's a cause. We don't know what it is yet. No catalyst, no news, no earnings, just attention. A surge without a story. The second name is CVKD. Closed yesterday at $6.02, a Z-score of 4.8, and sentiment plus 0.50. Stronger conviction than GDC, but the move on a stock price 40 times higher, which compresses the risk reward. A 15-cent stock can double on a tweet. A $6 stock needs more fuel. Same problem otherwise. Another surge without a story. When the convergence board is empty and the only surfacers are micro-cap surgers with no confirmation, the right move is not to chase one of them on the theory that something is better than nothing. The right move is to size them like lottery tickets if you size them at all, and keep your powder dry until momentum confirms or the convergence board lights up again. Don't fight the system on the day it's being honest with you. The watch list tells you where to look, and the greed list tells you where the trap is. Today, the watch list is two names, GDC and CVKD, both covered. But there's a third name that's not on the watch list, and I need to talk about it anyway because it's the most important divergence in the entire brief. SOXX, the semiconductor ETF, closed yesterday up 5%. The social narrative around it, negative 0.39, strongly bearish. The catalyst is explicitly bearish. AI financing stress, banking capital constraints. The price is right. The crowd is skeptical. Those two things do not normally agree, and when they don't agree, somebody's wrong. If that bearish narrative hardens over the weekend, every chip name you own is exposed to a Monday gap down. Now, watch that carefully. Now let's talk about where we're skipping today. The greed list is pretty loud. ON Semiconductor, beat earnings, doubled AI data center revenue, dropped 4% after hours. That's the market telling you a good print is not enough. Skip it. RIOT, moving the entire Bitcoin miner cluster. No individual convictions. Skip it. WLFI, surged on 3 mentions over a baseline of 2 from one source. Folks, that's not a surge. That's a rounding error in a costume. Skip it. That's not a catalyst. That's a pump. The dump pumpers are at it again. We've seen this exact movie. We know how it ends. Skip it. Broadcom, large cap, excluded by rule. The watch list is the watch list. The greed list is the warning. Today, the warning is louder than the watch list, and that in itself is a signal worth respecting. Quick educational tip, because today gave us a perfect opportunity to define a term. Convergence depth. Convergence depth is the number of independent intelligence layers that agree on a name at the same time. Layer 1 is social surge. Layer 2 is sentiment. Layer 3 is momentum, and layer 4 is options positioning. Layer 5 is short interest, and layer 6 is a catalyst in the news layer. Each layer is built on different data. Every layer does not know what the others are doing. They're independent. So when 6 of them light up on the same ticker, that's not a coincidence. That's 6 different ways of looking at a stock, all pointing at the same thing. A Z-score tells you attention spiked. Convergence depth tells you whether the spike has structural support. A high Z-score with depth 1 is a rumor. A high Z-score with depth 6 is a thesis. Today, every name we surfaced is depth 1, which is why none of them are a signal of the day. The math hasn't earned that label yet. That's all convergence depth is. People say it like it's mystical, but it's just how many independent things agree. Here's what to watch for next week. CPI inflation report drops Tuesday, May 12th. That's the next major volatility event. If you're holding any of the micro-cap surges we just named, size them with that Tuesday in mind. Here's what to watch for next week. CPI inflation report drops Tuesday, May 12th. That's the next major volatility event. If you're holding any of the micro-cap surges we just mentioned, Size them with that Tuesday in mind. Beyond that, the next Fed meeting is 6 weeks. Sarah Eisen called me this morning to give me a real economist read on the Warsh transition. She said she had a column to write. We're going to keep trying to get her on the show. Tomorrow on the Week in Review, I'll walk through every name BuzzPulse surfaced this week and tell you which ones actually delivered. Saturday is honest accounting. The good ones get airtime, the bad ones don't. 100 years ago, Jesse Livermore figured out something most traders never learn. There's a time to go long, there's a time to go short, and there's a time to go fishing. Today, the system says, Happy Friday. Sometimes that's the most useful thing a system can give you. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.